Time for the Tesla and Palantir weekly update. I'm going to include a couple other stocks and do a little mini crypto update since yesterday's flash crash. But before that, we are going to talk about Tesla, and there are a lot of fears out there that everything is going to collapse. Well, I just want to point out, first of all, I have a log scale Fibonacci level from the 2021 top and the 2023 bottom, and the reason why I was talking about 415 the whole time was because of this, right? It was because of this 2021 top. I wanted to see price just continuously stabilize and build a base on top of that 414.50, right around 415, and just keep building that base before it's ready to go higher. But it did not happen, but it is close, right? 413, 49, 414. It's pretty close. Does that mean it's going to go collapse back down to the 350s? Well, there is a lot of support down there. So if some other levels do fail, that could be a possibility after all. But what I'm targeting next week is essentially there's a couple of things, right? There is this gap still right here, and that gap is around 395. So I think that could be targeted if some levels break. And what levels am I talking about? Well, I'm going to put them on right here, just the more recent fibs from the 2024 high down to the April low, right? I have a couple of fibs I'm watching. The first one is 409, right? 409.54. And when you switch to linear scale, you can see that it's actually 406.80. So that is the zone I'm watching first. So if we can actually stabilize above 406, 409, then perhaps there would be no need to close that gap and maybe no need to even go back a little bit lower. So going back to the log scale here, 409 is what I'm watching first, right? We'll see how the market opens on Monday. We'll see if it can basically just continue to stabilize above it. At this point, I think it does need to back test it since it broke out. It hasn't really ever touched that 409, so doing that, it kind of makes sense. And also, when you look at this 886, the 444.72, it also makes sense why price is going lower, right? Just technically speaking, there was never a weekly candle close above this 886, 444.72, right? Never. Not even back in 2024, there was never a weekly candle close above it. So because of that, I think this backtest is the minimum that we're going to see for Tesla. But we're going to take it one level at a time. And the levels I'm watching, 409, then linear scale, 406.80. And then if that breaks a little bit, then 395. And then if we do get a gap fill right there, I think that could satisfy all the requirements to kind of reverse trend and maybe head back up to that 414.50, that 415 zone that I've been talking about. But I'm not too concerned with things breaking apart. And I'm going to show you why simply with the Ichimoku cloud here. Because when you look at the weekly Ichimoku cloud, you can see that price is still well above the conversion line and well above the cloud and well above the baseline. This is a very bullish formation, right? We don't have to worry about markets collapsing when you still have markets just well above all the averages, well above all the indicators and stuff like that. So that is also around 392, which is kind of coinciding with that gap fill. So there is confluence that price might want to fill that gap, might want to touch the weekly conversion line, might want to just go below that 409 and 406 zone before reversing trend and go higher. But that is not a bearish development. That 415 that I was watching the most was simply because that would maintain the momentum to just keep building that base and then go to all-time highs sooner. All this does, in my opinion, is delay things a little bit longer, and it might just need a little bit more liquidity lower. So that's the zone, right? 409, 406, maybe 395, 392 before any kind of a trend reversal to go higher. I am not considering the 350s just yet because we have ample amount of support before then, and I'm always about one level at a time before we jump to conclusions and start to panic. So let's watch this zone, 409 down to 395, 392, and see how price stabilizes. And if we get really good stabilization there, then there's no fear at all, and things could reverse trend and continue the journey higher. And next we have Palantir. And Palantir, I'm just going to keep it short and sweet today because last week I showed you the linear scale fib from the 2021 top and the 2022 bottom, right? I showed you this 4.236 fib at 171.46, and that is still holding, right? I'm not going to really use any log scale today. Going to just show you that really I'm only focused on two things. This 171.48 and put on the Ichimoku cloud, the conversion line at 166.17. That's all I'm really focused on for Palantir because it's still a massively bullish chart. It's just consolidating at the highest level ever, and 171.48 down to 166. As long as that continues to hold, it's just going to keep stabilizing in that zone and then go towards all-time highs. So I'm not concerned with this, but perhaps it does need a few more weeks or so of back testing before able to break free and go to the 200. So patience is required as usual, but this is not a bearish development. It's just establishing a base at a higher level in preparation to go to the 200s. And next we have Coinbase. And Coinbase, I'm just going to show you the linear scale fibs from the 2021 top and the 2023 bottom. So this is telling me that there might be a chance to find stability at this 344.37. So what happened this week kind of makes sense, right? Because it could not break above 384.17. It tried, it failed. So now it's getting more liquidity lower until it's ready to reverse that trend and go higher again. So it does look like there is going to be a little bit more down before up, and that 344 is the minimum target to do that. There also is that Ichimoku conversion line too, which is right here at 346.81, which is more confluence of that mid 340s area. So I'm not too concerned about Coinbase at this moment. All that is happening right now is price is trying to break into all-time highs, but sometimes it needs a little bit more time and it needs a little bit more liquidity lower before that happens. So despite that $50 reversal you saw on Friday, I think this is still a very healthy chart. Also, when you go to log scale here, it's still building a nice base on top of this log-based fib, the 886. And I've said it numerous times, when price stabilizes above the 886 fib, it usually leads to all-time highs and fib extensions in the future. So we are going to look at the 870s, the 1200s, and even the 2000s in the future, as long as this 318.95 continues to hold. And I don't even think it's necessary to go back there and back test it because price spent months, a couple months down here already consolidating. So I think the 340s could be kind of the max pain scenario, right? Going back to linear scale, I think the 340s could be the max pain scenario. There are some wicks down here that maybe like the mid 330s could wick down to. We know Coinbase loves to be volatile. So even if price does wick through the 340s and goes to the 330s temporarily, I think that's still okay for a successful back test of this previous resistance, now trying to flip to support in preparation to break towards all-time highs. And that's going to happen once we're able to break back above this 384.17. And next we have MicroStrategy. And MicroStrategy, I have this linear scale fib too from the 2021 high and the 2022 low. So I've been talking about this 322 level for a very long time, and it still is battling it as a potential support. So that is something we got to keep watching. 322.82, if we're going to get more bullish, price needs to find stability above it. And also because the Ichimoku cloud is right there at that same level too. The bottom of the cloud right there at 322. So if we're going to get more bullish, we have to start closing weekly candles back above it. We did last week, but this week there was a little flush below it. So we're going to watch that still. And as long as it stays below it, it is going to be our resistance for next week. So we do have to watch a few other things, and I'll put on log scale for you right here. And log scale, we can see that the top arc was rejected this week, which means we're in a new range. And in fact, we would be considered to be in arc jail, right? We're in the jail, but we can't break out. So now we're getting rejected at the top, which now leads a potential of retesting the bottom. So if you're looking for support now for MSTR, it might be in the 270s, right? The 272 zone. And I think after hours on Friday, it got pretty close to that, right? So we're going to keep watching that as our support. And I think as long as price stays in this arc, in between these two arcs, I think it's going to be okay, right? I think it's going to be okay because this is a bullish development. It is actually not bearish, right? It is kind of like a giant bull flag on the weekly chart, just building a base at a higher level. And when you put it back on those log-based fibs, we can see even that 245 was the bottom back in April, and price is still basically stabilizing above it as well. So we know our resistance, 322 up to 340, even up to 359. That's our resistance too. And we know our support, right? Our support now is right here, 270, maybe even back down to 245. So this doesn't really change anything how the weekly candle closed. All it really means is probably more time before any kind of a breakout. And I want to just put on the Ichimoku again just to show you the monthly candles here, because the baseline is also still holding, and that's kind of near where that bottom arc is. They're at 286. So there's really no difference month over month of MSTR. All that's happening is resistance is still getting rejected while support is holding. So when you zoom out on the high time frame, you can see that all price is doing is just buying time to get closer and closer to the monthly cloud until it's ready to continue higher. So I cannot be bearish about this chart. I think what we're seeing is just a massive breakout. Still hasn't even touched the monthly cloud since it broke out back in February of 2024. So it just needs a lot more time. And again, this is nothing like the previous bear market in 2021. Look at that. This orange baseline was a resistance for almost a year. Guess what? This baseline right now is a support for almost a year. This is the exact opposite of what we're seeing right now, right? That's all you got to see. That orange baseline right here, orange baseline, is now a support. But back then, it was the market top because it was a resistance. So we're not experiencing the same thing. So I think everybody should be able to relax about that and just keep watching the 286 down to the 270s, maybe even 245s if necessary, until it's really ready to continue that journey higher. And next, let's talk about Bitcoin here. And with Bitcoin, we can see that price is not so volatile compared to some of the altcoins. And I have the Ichimoku cloud in front of us right now, and I want to be showing you just a couple different versions of what we're seeing. So on this chart, it did not touch the baseline at all, right? The 104,687. It is going through the conversion line right now, the 116,773, but it did not touch that baseline. So we are seeing that on different exchanges, there's different prices. So the low of, this is Bitstamp here, the low of Bitstamp is 109,683, right? The low of Bitstamp is that. Then we can go to Coinbase. The low was 107. It did not even touch that baseline, right? The 104 did not. But we can even go to Crypto.com and you can see, wow, it touched the baseline and went to 103, 133. So every exchange had a different price, but this one did touch the baseline, and if you want to use that for some confluence, I think that's good, right? And also, on every single chart, there is a rising baseline, which is bullish, right? A rising baseline and touching it and backtesting that is a healthy development for a potential continuation. But going back to the Bitstamp chart, it did not have that much of a drop at all. In fact, it barely went below last week's low. Right, last week's low was 111. It barely went below it. So that wasn't much of a crash at all. Not much of a panic. It was more of an altcoin thing. And what I want to focus on too is the bull market support band with Bitcoin, because we can see that all it's doing is going back down to retest that baseline. Or not baseline, that average. The green line here, we can just click on it and we can see that when we double click on that, we can see the green is the 21-week EMA, right, this green, and the red is the 20-week SMA. So that's what the bull market support band is composed of, and nothing was broken, right? It just wicked through it and is holding, just like it did 2 weeks ago, just like it did a month ago, just like it did before, where it spent like a couple months below it, but then it recovered, right? So nothing is broken. In fact, we're still kind of an inside candle week over week from last week. Right, we'll see how tomorrow the weekly candle closes, but nothing is really broken at all. I think what we're going to see is just maybe some stability right around this 112 zone, and I'm going to show you why that 112 zone is important. And here's why the 112 is important. So I have this daily chart just to show you some price action. of levels, right? We can see this green level, super important level, right? It was basically right around this 91,500. And it was our stability and rejection point, and then the breakout point. And then 112 was our resistance right up here back in May of 2025. And then it broke out, back tested it, kind of spent a little bit of time below it, and now actually we're still finding stability right around that 112. So I'm really going to be focused on this 112 the most, but that's only for momentum. If this 112 breaks, it doesn't really mean the bear market has begun. It just means that if we're going to go back to all-time highs, I would like this 112 zone to hold. So that's why I'm watching this 112 zone the most out of everything, just to see if it really wants to just maybe do a V-shaped recovery and go back to the 120s quickly. But the thing that's the most important here is on my linear scale chart from the more recent fib of January 2025 and the April low. I have these fibs here, right? The fibs here, 123.814, that was rejected 2 weeks in a row. Then price came right back down to 109.356. So if we're looking for something that is really important to hold week over week over week, it's this right here. It's this previous top back in January flipping to support. That's what's the most important to me, which is 109.356. Almost got there on Bitstamp, but we already saw that Coinbase and crypto.com, they went lower, so they already wicked through that level. But essentially, stay above that 109.356. And the bull market is super strong. I have a confluence of that too with the linear scale arcs. Look at that. The bottom of that arc, I've been showing you this for a while too, is around that same price, 108.8, which is also around that 109. So any kind of back test of this arc, any kind of back test of that 109 zone is okay. So the bull market for Bitcoin is still on, is still strong. And what I'm watching the most is that 109 right here, 109.356, and the bottom arc for support. I want to see that stable. I want to show stability on top of it in preparation to continue that journey higher. And next we have Ethereum. And Ethereum, I want to show you what happened with Ethereum. So again, every exchange had a different price, but we're going to use Bitstamp for this one. And what happened is it went right through the bull market support band, right? The 21 EMA and the 20-week moving average. So nailed it. And this was actually the first hit since it broke out back in June of this year. So retesting that is not bearish. Retesting that and holding it is actually a very good development. Also, this zone is kind of a previous resistance zone, really trying to stabilize and flip to a support. So is it going to be successful and hold? Well, tomorrow is the weekly candle close, so we are going to pay attention to that. So let's put on the fibs as well from the 2021 top and the bottom here just to see what we're working with. We'll take off that bull market support band. And with that, we can see it is going below this 4,006. But again, tomorrow is that weekly candle close. Let's see how the weekly candle closes. If it closes above it, then I think we can be okay. If it closes below it, there still is a little bit more room to retest that 786, right? So we'll have to just get our confirmation tomorrow if we need to retest lower levels one more time or not. But still, it's a healthy development. All that happened was price got rejected at the previous all-time high back in November of 2021 and couldn't break out just yet, so it needs more time. But again, let's watch the weekly candle close tomorrow, the 4,006. We'll see if that can close above it. If so, that would be the best case scenario for an attempt to just keep going higher and higher and higher again. But if not, we could prepare for another back test, maybe the 3,500, maybe 3,376 or so before going higher. But before we move on, I want to just show you the linear scale Ethereum chart right here and show you what happened. So price did actually go back down to the orange Gann level here, which was a big resistance zone in the past, right here, right around 3,500. So, and that 45-degree angle is around that 3,300, which kind of makes sense for this 3,376 as well as a potential before going higher. But either way, this chart is not concerning. Also, it's still trying to stay inside the arcs here, so I'm going to be watching that. If it can successfully stay inside these arcs here, then it is going to have a potential to break out sooner. So let's watch that weekly candle close. Ideally, 4,006 is the target, If not, it could need to retest a little bit lower first, maybe 35, 33, whatever, before going higher. But all you got to do is look at this formation. Since the 2022 low, it's higher highs, higher lows, higher highs, higher lows, right? It's a higher low from here and here. It hit the blue angle perfectly and bounced, right? This was a huge V bottom, right? Huge V bottom back in April. And we got nowhere near the April lows, nowhere near. Like some of the altcoins, they got past their April lows, which is insane. But this is a more recent higher high from here as well. So the market structure is still fine with higher highs and higher lows. So even if it does go back down to the 35, 33 again, it's not a bearish development because it would just simply be yet another higher low from back in April, right? That's it, just another higher low. So the market structure here is fine based off of that bull market support band, based off of the fibs, based off of my linear scale GAN. And I think we're just going to have to be more patient until a breakout. But this is not a bear market structure. This is a bull market structure because support is holding. So let's just keep watching support and wait for the weekly candle close because ideally, best case scenario, we stabilize and close tomorrow above that 4,006 and try to go higher, which would help avoid retesting lower first before making that next move higher. And next, I want to talk about XRP and show you a couple of things. So XRP, what happened was price got so volatile, it went back down to touch the 20-month moving average. These are monthly candles, and since the breakout back in November of last year, it did not backtest it until we had this liquidation event yesterday. So that's not bearish, right? That's actually a bullish backtest, and so far it's a nice wick. Also, when we put on the moving averages here and we take that Bollinger Band off, we can go back and see the weekly chart and look what happened. It wicked through the 50-week moving average and it's still stabilizing above it. And that's also the first touch, right? It did not touch it any other time and it just touched it yesterday at 241.718. And lastly, let's just put on a more recent fib, not a more recent fib, but a fib from the previous top back in 2018 and that bottom down here, and look what else it hit. It hit the 786 fib at the 161. So a lot of confluence of levels being maintained. Also, this 886, this is the key level, right? Usually anything above the 886 fib from previous cycles means that all-time highs are coming and fib extensions are still on the table. So this actually could lead to, the liquidation event could lead to it just being like a slingshot for price going higher. So I think let's wait until the weekly candle close tomorrow. Let's watch this 241.7. Let's watch this 225. If price continues to stabilize in that zone, it's going to be okay. And it's going to have an explosion sooner or later. And nothing was damaged on this chart. And next I want to show you Chainlink as well. Chainlink also had these are monthly candles. Chainlink also had a huge liquidation event. Went all the way down to the $8 zone to touch the bottom of the Bollinger Band, and that's 836. Nailed it, but it since has recovered and is also still maintaining this basis right here, the 20-month moving average at 1628. So also, nothing was damaged on this chart. We're still going to watch tomorrow's weekly candle close, see how it develops, but ultimately this 1628 is in a very important zone and price is still finding stability above it. We can also go back to the fibs here and also the moving averages and just take off the Bollinger Band and just show you what I saw. So price got rejected right here at the 25.85, came back down to this 45-degree angle, wicked through the 200-week moving average, got all that liquidity, even went back down to the 236 and nailed it, right? And look at that 236 in actuality. Look at how important this 236. I'll take off everything else just so you can see it, right? Just so you can see. Look at this. Look at how important this is, right? A wick there, bounce. Previous resistance, breakout, back test, flipping to support. Crazy that it happened. I would never have guessed that would happen, but it's so insane. But this is a bullish development, not bearish. Also, staying above this 1589 is bullish. We might lose this 2111 next week, so that's something to watch. But let's put on the Ichimoku. And it's still inside the weekly Ichimoku cloud. So not all is lost either, right? Something that was battling the Ichimoku cloud before, right here, before the breakout as resistance, it is now back testing it as a potential support. Even that baseline right there, that orange baseline, is at 1789, and price is trying to battle to stay above it. Even the conversion line is at 1789, and price is trying to battle to stay above it. So let's watch a weekly candle close tomorrow, and if we close above 1789 or higher, then it's good. But even if we don't, it can still stabilize inside the cloud above the 1589 and then be prepared to just go higher. But doing this crazy volatile backtest of a previous major support zone, in my opinion, is not bearish. It is still bullish. It's still holding that 20-month moving average that I showed you with the Bollinger Band. And also, it's just backtesting, making a higher low, right? Making a higher low from here, from here, from here. This is not anything to be too scared about, in my opinion. I think it has a great chance of recovery, but let's watch that weekly candle close tomorrow. And next we have Dogecoin, and Dogecoin did something incredible. It came back down to the arc again, just like it did back in April, right? So it made a lower low than April, but wicks don't really count. It's just where the bodies of the candles are, and there's no lower low so far. So what we have now is from this orange level, we got a breakout rejection of this arc, came back down, breakout, backtest of the arc, and now another backtest of that arc. So with that and a series of higher lows, higher lows, higher lows, this is not a bearish development, so it's fine. Also, we can put on some fibs too and just take a look what's happening from the 2021 top and the bottom here back in 2022. Price is still actually trying to stabilize on top of this 19-cent zone, the 50% fib. So all we're seeing actually in reality with the bodies of these candles is for the past few months, price is stuck in between 26 cents and 19 cents, right? When you can visualize it like this, it's not so scary after all. It's just stuck. It's stuck in a range. Also, we can put on some moving averages as well just to see what that is looking like. And it's also stuck in between the 50-week moving average and the 100-week moving average, and it still is stabilizing above that 100-week moving average, which is also around 18,405. So that's right around that 19-cent area, and it did also wick through that 200-week moving average as well. And lastly, let's just put on the Ichimoku cloud here, and we can see that the baseline on conversion line is also right around the 20-cent zone. And the reason why things never could break out is because the cloud was still acting as a resistance. Same as it was last week, same as it was the week before. So inevitably, if it can't break resistance, it's going to go back and retest some levels, get some liquidity lower. Who would have thought this much liquidity lower? But, I mean, all that leverage is now out of the system, right? It's a healthy market now. There's no huge risks to the downside anymore. It's already been gone. It's already been taken from people. So we're going to keep watching those zones and see if price can stabilize around that 19-cent, 18-cent zone. And if successful for tomorrow's weekly candle close, then we'll see price just try to stabilize, and then in the weeks to come, try to finally break that resistance above. So patience is required for this one, but also no damage has been done to this chart. And next, let's talk about Solana. And Solana also using the fibs from 2021 and the low in 2022. Price is just back testing that 174.77 right there. Also, when you take off the fib, you can see it's also back testing the arc again. So we have a breakout back test in process right now. So we're going to watch that to see if we can find some stability above it. If successful, then we're going to continue that journey higher. But if not, there is that blue level right below it too, around 156, and that it has shown a lot of stability in the past, right? Its price has usually gravitated around that zone and has recovered ever since it gets near that zone. So I'm not too concerned with the development of this chart. It's stabilizing around 174. That's bullish. Also, you can put on the moving averages as well and take a look that it's still holding the zone of that 50-week moving average, 182.79. It's a little bit below it now, but tomorrow is that weekly candle close. We'll see how things develop. So nothing is really broken there. It's just so far a successful backtest. Also with the Ichimoku cloud, we can put that on and just take a look. That the bottom of the cloud was hit, right? It was touched, and all it's doing is a breakout backtest of the cloud, right? And the top of the cloud is right here around 196. Ideally, that'd be best case scenario to close above tomorrow. But if not, anywhere inside the cloud, anywhere above 174, that's okay. because anything above the 886 kind of means that price can go to all-time highs and even the fib extensions above later on in the future. So after everything I showed you with the crypto market, I could continue, go on and on and on, but the market structure is not broken. Nothing is broken technically. All those wicks did is just de-risk, de-leverage the system, and things can be more healthy now for the potential to continue the journey higher.